In today's video, we will take a look at consumer and producer inflation, PCE, construction data, new homes and existing home sales through United States, and so much more. My name is Anna Eckstein, Naples Ultimate Luxury Group, MVP Realty. Let's start. Thank you for joining today's video. If you're new to the channel, please subscribe the button below. And let's start with this interesting article that I found online. And it says, here's why your 4th of July barbecue might be pricey this year. I always point where this article came from, and the source also on bottom of each article. So if you do like to read full article, please go online and read the full article. But I would like to point a few highlights for the article, and says here that traditional Independence Day for the barbecue for the 10 people will cost you $71.22 this year, average. And it's actually up 5% from 2023 and 30% up from 2019. And this is accordingly to American Farm Bureau Federation estimate. It's really quite interesting because I'll be honest with you, and I would like to hear your opinion. Please comment below. I believe my barbecue will be a little bit more than $71.22 if I would invite 10 people. So please leave your comments below. Would love to see how much your barbecue for the 4th of July would be. And of course, happy 4th of July to all of us. So I thought this kind of interesting article would like to share with you. So in the article kind of continue, go and on and beyond and break down the food and percentage, how much the 2 pounds ground beef actually is $12.77, and it's 11% up from 2023. Again, please source below, take a look the full article if you like. I just thought like on average, if you invite 10 people, this will be way more than $71. But anyway, that's just my opinion. So another interesting article that I found, again, source below, that for the past, basically, what this article claimed that for the past, 3 years-ish, the groceries prices actually went up only 20%. Just put brief overview of this article, not full article. So a lot of the audience, I think, would have a hard time to believe that that the groceries only went up for the past 4 years by 20%. And this is accordingly to BLS, which is reported by Federal Reserve. It's actually the number exact to be is 20.8%. So let me know again your comments below. So many people just, when they saw this article, they basically go online and post this groceries bill from 4 years ago to now. This actually one of these, some people on social media posting that I think it's like between 2 or 10 times of the rate that actually been posted in an article. And also there's one man, he bought 45 items in a Walmart for 2 years ago for $145, and now the same items would be priced $414. Not sure what kind of items he bought it, but anyway, my opinion, if you watch the channel, you know that I believe there are inflation way more than higher that's actually been recorded and reported or estimated. So that's just my opinion. And obviously, it says even right now is no inflation. It's not means that we're going in disinflation. Just our prices is not going in as fast as they've been going in, let's say 6 months ago or let's say a year ago, right? So again, please be my guest to read the full article. I just wanted to share with you some highlights. And the article, again, just give kind of breakdown. And it says actually here for the CBS News that they did run some price checklist for the groceries. So you see how interesting enough, the different surveys, they're just like so different numbers. Like, okay, how one price checker can be 20.8%. The second would be between 30 to 40%. We're talking about a huge difference, right? Anyway, unfortunately, my eggs doesn't cost $2.70. I don't know what kind of eggs you can buy for $2.70, but I'm telling you, the one that I buy, it costs way more than $5. So again, I don't know which store this has been priced and what kind of eggs, but so let's talk about the Fed interest rate decision. So as we all know, Fed came in June, and they decided to keep the rates the same as they are, which is anywhere from 5.25% to 5.5 kind of target range, Fed fund target range. So they said again that we would like to see progress on inflation, because in the beginning of the year, the inflation spiked a little bit higher. And for the past calendar month, we see the inflation cooling off again. We will take a look at some charts later in this video, but they decided to keep these rates as they are at the June meeting. Now, what's interesting enough, what did change in the June meeting, that the projection rate, they actually increased from previous. And you can see the first year, they anticipated more rate cuts, and actual, they estimated it will be potentially by 25 basis points. See, obviously, how economy goes. Between 25, maybe one, maybe two rate cuts, but this is what they estimate. Basically, first year, the rate would be 4.1. The second year would be 3.1. But you can see the first year, the previous meeting actually was 3.9. So the previous meeting that was before June meeting, the expectation of cutting rates was much more favorable at that meeting. And then when they saw the inflation start spiking up a little bit, they decided to increase that rate holding higher for longer to 4.1%. And you can see the second year, you can see the current year, and also, so the current year, you see how they anticipated more rate cuts in the previous meeting, and June meeting, they decided to raise basically the expectation, not cutting as much, unless something really breaks in the economy, then, obviously, Fed will step in. They would have no choice. So, and the rate for longer is also is a higher rate compared to the previous meeting. So just wanted to share with you. And if we're going in and see, well, if the Fed cut the rates, when that can possibly happen, right? So this is the meetings that already happened. So we had a meeting in January, March, April, May, June. So, and the next Fed meeting would be in July. So we had today Fed meeting. So as release of this video, I'm recording is July 3rd. And I usually wait until I have the whole data for the whole month. So I'm collecting data in June, and this is data for majority will be reflecting the May data. So, and so you can see that this has been released just today, and anticipation again, the Fed speakers and Jerome Powell come in and say, well, we made a lot of progress on inflation, but there's a lot of still work to do. And they want to more see positive data, how we had for the past 30 days. So, and each month we have all the data that I'm covering to you in this video. Every month we have fresh new data come in. So now we're in July. We'll be receiving all these readings, and this is for the month of June will be data. And if you like this type of information, please subscribe to the channel, get notifications so you can be the first to notify when I'm releasing the videos. And I usually release the videos at the end of the month. Like this, or on the slightly on the beginning of the month. So stay tuned for this economic data, because it is important to track where we at in economy, where are we going in, what estimation, what expectation, things like that. So the next meeting, so basically we have 4 meetings, guys, this year for the Fed to make a decision. So the next meeting you can see will be on July 30th. So this will be July 30th and July 31st. Expectation of them cutting the rates, I don't know if this will be enough data for them just in June to start cutting the rates. September, there's better possibility. And obviously in November, that's our election. And then the last meeting we will have in December. So 4 meetings. If they will be cutting the rates, I hope they will, because the longer they hold in the rates, as high as they are, for longer as they are, and other countries obviously cutting the rates. The Canada already cutting the rates. I mean, there's quite a few countries who already cut the rates, and an expectation of some other countries cutting the rates. But our inflation been sticky, and as you're watching this channel, you know that I've been talking for a long period of time that we feels like in stagflation. So anyway, just wanted to share with you the future Fed Reserve meetings, and you can put in your calendar, and obviously I will be covering all of them at the end of the month as I receive the information, where the rates and where we're going in with the rates. So let's talk about inflation. So we will cover the CPI. It's a consumer price index, and we're looking the inflation rate, and also we're looking core inflation rate. So core inflation rate is more, it's less volatile items such as food and energy. So, and you can take a look that this is annual inflation rate, and you can see how the inflation been travel, and it's been sticky. So we're stuck in this 3% range, and you can see that we had in March we have 3.5. In February, we had 3.2. So it's kind of jumping all over the place, right? But it's that sticky in that 3% price range. Think about, we going in here from June, we're in this 3% range on the inflation. On the core inflation, we had sticky core inflation for a long period of time, and you can see the gradually start going in down as we continue. So hopefully the rate of the inflation going in down will continue in this pace, or maybe even faster, hopefully. And that would encourage, obviously, Fed to cut the rates sooner than later. And that would be better to, obviously, consumer, to the economy overall, to corporation. It's just the economy can sustain so long with these rates, but sooner than later something will break. And hopefully they will cut rates soon enough before things start falling apart. So you can see the core inflation is 3-year low is actually went down to 3.4%. So the target rate, if wondering what the target rate is 2%. I will live in La La Land to get to 2%. I think the Fed will have a really hard time to get to 2%. I'm not a Fed. I'm not a economist. I'm just regular human being who live in this economy for the past 4 years when all this high interest rate, high inflation, and that's tough. If you just regular consumer, that's not easy. And most of you guys watching, you know that we all experience this high prices. And if somebody says, oh, your groceries only went up by 20%, I don't think so. So anyway, you're welcome to pause this, and you can take a look. This is month over month, how the inflation traveled through all these items. And we have food, obviously break down, the food at home, food away from home, the energy. And interesting enough that a lot of the relief from, this is what concerns me, a lot of relief from the inflation was actually in energy for the last month, but the oil right now is $83 a barrel. And it's just right around that. Is that will be continue going in higher? Who knows? But it certainly went up higher than was month previous before. If this will be spike up more in inflation, I don't know. Like, we'll see. Like, if you're looking on certain things like headlines, like shipping rates on those shipping containers and all the crisis with the Red Sea, is that will be flow more into inflation? Is that will be oil spiking up? All this, war issues potential, and who knows what else can be up there. So we'll see what the future holds. Obviously, we don't have a crystal ball. But moving on, you can pause this, you can take a look. What is going up? One of the sticky inflation, the Fed trying to wait and see when the shelter start going down. So you can see it's still at 0.4%, continue to be sticky. And as we all know, our real estate pricing way to the roof, the rent is way to the roof. The good thing, what I was noticed, the new vehicle and used vehicle pricing actually kind of start going down, except it was down, except the last May was 0.6 actually increased. The new vehicle was down 0.5%. So producer price index, why I'm sharing with you and why it's important. So if there's more expensive to produce services and product for the producer, obviously there will be spillover eventually, sooner than later, to the consumer. That's why you have to pay attention and see what's going on producer side as well. And you can see it's been increased to 2.2%, and core is actually is decreased to 2.3%. The target is 2%. So something I would like to share with you, this is, I just found this interesting, that they did actually take the PPI, it's producer price index. They actually exclude food, energy, and trade, and that actually rose to 3.2% in May, and following by 0.4% increase month over month. So PCE, this is the producer it's a personal consumption expenditure. And that also, so this is actually prefer gauge for the tracking inflation for the Fed, just guys, so you know, that's the reason why I'm sharing with you. And that's actually decreased to 2.6%. Target is 2%. So moving to the personal income. So why is that important? Because as we can tracking on this channel, and you can see on the chart below that personal income, it rose. Actually, this month wasn't that bad. It rose by 0.5%, but the personal spending is actually only increased 0.2%. But you can see the previous months on the chart that the personal income increased so much, but the spending is double that. So that's why, you know, if you have a regular paycheck, the pace of your paycheck increasing is so little, but expenditure is increasing so much. So that's why it's really hard for the regular American who's working and have a steady paycheck to deal with this inflation. It's really hard. The non-farm payroll, this is something the Fed carefully watching as well, because from the beginning, since this inflation started, they indicated always that is obviously they want employ as many Americans to be employed as much as possible. But for some reason, they're always watching these numbers because they don't want to economy is overheating, and then will be spill over in more inflation when we're already keeping the rates so high. So the economy added 272,000 jobs in May 2024. And it's most actually in 5 months compared to downwardly revised 165,000 jobs in April, above the forecast of 185,000. So unemployment is a little bit uptick to 4%, and this was from 3.9%. And you can see on the charts below how that's been traveled. This is just a breakdown. If you like to pause, take a look between manufacturer, the government jobs, how much they've been added. So our average hourly earnings. So that's important for the Fed as well. Make sure that there's no wage spiral in inflation, and that doesn't cause more inflation. So this has been increased by 4.1% from the previous year in May of 2024. And it's increased by 0.4%. by 14 cents. So initial jobless claims, this is something that when the people become unemployment, when they file the initial jobless claims, it's always, you need to carefully to track that, because this is how the whole unemployment can really go up. And you can see it's based on Federal Reserve comments, we have a strong job growth in the country. So it's actually initial jobless claims increased, and this is for the last week of June, actually, to 238,000, the unemployment claims. And this is actually above market expectation from 235,000. The continuous jobless claims also increased on the last week in June, and this is as of June 2022, 22nd of June. So we finally received our growth rate for the first quarter, and I would like to share with you, I did share with you, I believe the last month was preliminary estimates, second estimates, and our GDP actually grew to 1.4% in the first quarter of 2024. And you can see it's actually losing steam from 3.4 that we had in the fourth quarter of 2023. So we definitely slowed down with the growth, and we'll see again how the future holds. But that's final number came in at 1.4. It's slightly above from the estimates from 1.3. The price index, that's the measure of the inflation for the deflator in the United States. This is increased to 3.1%. And it's actually in the first quarter, just so you know, in the first quarter, there was 1.7% rise in the fourth quarter. And in the first quarter, it rose to 3.1%. So that's definitely inflationary. So GDP sales final for domestic products. So we did get annual 1.8% in the first quarter, slightly higher than 1.7 for the second quarter estimates. It's the first quarter. And consumer spending annualized, we also increased 1.5% in the first quarter. So PCE, we already went over PCE month over month. This is just the PCE for the quarter, and you can see the PCE for the quarter increased 3.4%, and the core PCE increased to 3.7%. Corporate profit actually fell by 2.7% from to 26.8 trillion in the first quarter of 2024. So falling of corporate profits, obviously that's not good, but I'm just delivering the data. So S&P Global Service PMI flash, you would wondering why I'm sharing this with you and why do we need to know this data? It's actually inflationary data, and I wanted to share with you. So in June, and this is actually a brief explanation. So S&P Global Service PMI Flash is a preliminary estimates of the Purchasing Manager Index, PMI, for the service sector provided by S&P Global. This index is an important economic indicator that gives an early snapshot of the health and performance of the service sector within economy. So that's the reason why I'm sharing with you. And the expectation, it's come up, rose above expectation to 55.1% in June. 54.8 was in previous months. Expectation was 53.7. So retail sales, we can see that they increased by 2.3% year over year. And a retail sale month over month increased just 0.1%. Retail sales, excluding auto, month over month, and you can see that actually decreased 0.1%. And you can also see the retail sales, excluding gas and auto, it's also just edged up by 0.1%. So used cars, this is actually, well, at least some good news in terms of the cars, not as expensive as they used to be. You can see month over month, it's just been falling. And you can see that actually used vehicle value index in the United States declined 12.1% year over year in May of 2024. And this is after a 14% drop in April. So that's quite progress, at least on used cars. Month over month, you can see it's actually decreased by 0.6%. So new home sales. If you like the statistics, I do have another video they are always producing at the end of the month, and always will be attached to this video is the local update for Southwest Florida. This is where we'll cover national update. And new home sale year over year for the single family home in the United States sunk by 11.3% month over month to a secondary adjusted annualized rate. So what I like you guys to do is to pay attention where I'm actually covering. So this is new home sale, right? This is the homes that have been sold by the builders. So let's take a look, building permit. So building permit is fell by 2.8%, seasonal adjusted annual rate, right? So the new home sales falling down, the building permits fell down. The housing starts, that's the one that already had, it's like a home in progress, right? So, and you can see that that fell by 5.5% on annualized rate. And this is a couple articles that obviously I always pay attention if I'm watching any YouTube channels, or if I watch any real estate related or any different like websites, and I see something interesting, I always pulling up and say, well, Market Watch, this is what they posted, but that's basically what we just cover. It's just the article. And of course, the source below. This is another one, construction spending, the biggest drop wasn't expected. So that's not good. So S&P Case-Shiller Home Price Index, what does that is? So that's an index that are taken in major 20 cities, home prices on the resales, right? Home prices in United States actually rose in April. So pay attention. Some of this data, I'm taking always the latest data, but some of these studies, they need to take a time to kind of finalize the numbers, projections, things like that. So you have to make sure you understand that this is for the April, right? So what I just covered for you, that was previously done for the May, right? So we're going in back now 2 months. So it rose 7.2% in April. And this is some breakdown on the cities. You can see that actually the highest, San Diego, the highest continue to report highest annual gain almost in 20 cities is 10.3% in San Diego. So this is month over month. You can see it's increased as well. This is for the April. So existing home sales, this is going back to the May, right? And we can see the existing home sales is actually declined. So you have to a little bit make sure you understand like the headlines. That's why I sometimes point that this is index being taken from 20 major cities, right? And it's April. Existing home sales. Now we're talking about in the US, right? That declined 0.7%. And this is for the May of 2024. So you can see also month over month is also declined. So pending home sales. Pending home sales in the United States fell by 6.6%. When? In May of 2024. The same thing month over month. So MBA 30 mortgage rate, where are we at today? So we always pay attention to data and pay attention where I'm saying. So average contract interest rate, 30 years fixed, mortgage rate confirming loan balances, 766,550 or less, increased by 10 BPS points to 6.3%. And this is the week ending June 28th, right? So the previous week was actually 6.93. So it did go up a little bit. And the applications. So we look in the application actually fell by 2.6% in the last week of June. And in MBA Purchase Index. So this is interesting index. Would like to share with you. You're wondering, what does that index mean? Here's the explanation. The MBA Purchase Index is a weekly survey conducted by Mortgage Banker Association that measures the volume of mortgage loan application for home purchases in the United States, and that decreased to 142.90 points in June 28th, and this was from 147 points, 0.80 points in the previous week. So I was like fascinated. I was looking, I was like, oh my gosh. I mean, look at this. We had in June of 2005, 529.30 points, right? Look how huge this is decrease. And this is in a purchase application. It's a huge difference. And the record low was 53.5 in 1990. I just thought it was interesting data and would like to share with you. So housing price index. So housing price index is actually measure the tracks and changes of the home prices, and it's provide indicator of how home prices have been evolved and reflecting trend in real estate market. So we have year over year and we have month over month. And it's the average price of single family houses with mortgage guarantee by Fannie Mae and Freddie Mac in the United States actually increased by 6.3% in May. So you see how you're looking at all of these indicators, and you have to understand it's just the way how they taking the data. Like some is like certain price, right? Some is overall, some is like in a 20 major cities, some. So you have to understand always the data, where it's taken and how it's been calculated, because United States is a huge country. It has all kinds of different price ranges, different regions, different cities, different counties, and all of that completely different calculated. That's why if you would like to know, to understand what's happening in your area, you always have to refer to the local data. And remember, if you're looking data for Southwest Florida, I cover Naples, Marco Island, Bonita Springs, and Estero. Please click on the video. There will be a link to this video at the end, and you will have very good data that indicated the trends, real estate market trends in Southwest Florida. So the 15-year mortgage, this is actually the last chart that I would like to share with you. This is just the updated, we have this update was on July 2nd, 15-year mortgage rate in the United States. So if you're looking for 15-year and you're wondering what that is, it's 6.25%. The 30-year rose by 9 basis points, and it's 6.95%. And this is as of July 3rd. I hope you enjoyed this video. I hope you find this video valuable for you and for your family. If you do so, please don't forget to subscribe. My name is Anna Eckstein, Naples Ultimate Luxury Group. And if you're thinking of selling or moving to Southwest Florida, please give me a call. My phone number is 239-249-4476. Thank you so much and have a good day.
Me wind